Hello, welcome back. In this video we are taking a look at a trending company, Aterian, a company that is currently really being discussed in the markets, and you will see that it has a high beta lately, in the past few months or so. Very few employees here, a relatively new IPO. It is a furnishings and fixtures and appliances industry company. You'll see here that actually the company provides AI marketplace e-commerce engine, a software technology platform with machine learning and all that. And its platform offers home and kitchen appliances, kitchenware, and quality appliances, humidifiers, and all that jazz. Now, if we take a look at the stock analysis here, you will see in the chart that the stock has actually really been annihilated, 85% down from its 1 year high. And if you take a look at the max chart since its inception, since its IPO, you will see that it has gone up quite some and then come down quite some as well. And so in the last 5 years, again, actually this is the same chart because the company is very new, but if you take a look at the 1 year chart, you will see that it has been going down with a little bit of a glimpse in a couple of situations, but still going down overall and quite substantially. Now, we need to take a little bit of a look at what the company is doing financially to see whether this kind of price here, this low price of $3, is interesting for us to actually enter this company, because as long as a company goes down a lot and the financials support it, you could actually have a case for buying this one. And that could even be the case in some situation if the company is losing money, although you have to be super careful about it, as I have explained in multiple videos. Now, the P/E ratio of the company is actually negative right now, although it's getting a little bit better. The price to free cash flow ratio is also negative, and it used to be high and positive at some point. It's interesting to see. So things look like they have deteriorated a little bit. But look at this outstanding shares count, insane dilution going on here. Something that you don't like to see, because, yeah, if you bought back in 2019 here, this is a couple of years just. The company has diluted investors by 400% almost, which is absolutely insane. You have been massively diluted as the company's stock prices were going down, as the stock price was going up, sorry. So the company was getting some money off of stockholders, but then it again fell off a cliff, and this kind of extra supply over here really played a role with it, I'm pretty sure. And the 5 year revenue growth has been increasing, and that's a good thing to see, and pretty nicely as well. And the net income growth, though, going down. Same with the 5 year free cash flow growth also going down. Equity has been increasing, but remember that comes from the outstanding shares of the company, the outstanding shares count that the company has been actually issuing. Okay, so the margins of the company and the returns, of course, negative because the company is not making money is the thing. And we can take a look at the income statement of the company here, and you will see that although revenue has been increasing, if you take a look at the net income, this actually has been decreasing. And actually last year, 2021, was actually their worst year, losing $200 million and a little bit more actually. But the balance sheet, you will notice again, a very typical thing with companies that are losing money and issuing shares. It's going up. The total equity is going up because of the additional paid-in capital, because of issuing all these extra shares, massive amounts of shares over there. Now the cash flow statement over here, again, we start with negative net income, and we continue with negative operating activities cash flow over here. Used to be marginally positive in 2020, again in negative territory right now. Now the investing activities cash flow negative as well, which is a good thing to see. The company has been investing a little bit, but also the financing activities is positive. So the company has been getting a little bit of debt, a little bit of extra debt with the shares that they have been printing. Okay, the cash that the company has is basically almost nothing here, very little cash. Although remember, this is a very small company, so that matters. And the free cash flow here is also going in negative direction. And yeah, you'd like this trend to continue over here, but we are going back in negative territory in 2021. Now remember that the stock price has fallen off a cliff for 85% down, and so even though the company has been losing money, they have in some situations come closer at least to profitability, although their net income is not profitable yet, so bear that in mind, and it's actually moving downwards in a downwards trajectory. But you want to examine what would happen in the case that the company actually starts making some profit. And we're gonna go low in terms of revenue growth, although the company will more than likely achieve better growth here. I'm gonna go 10, 13, and 16. But what really matters are the net income margins, which, as you see here, they have been very suppressed. We do have to go relatively positive here to see what will happen if the company actually achieves profitability and starts making just marginal net income here, with a free cash flow margin of about 80, 90 and 100% of what the net income is. And if we had an annual return of 13%, which I would typically want to make, and I hit calculate here, you will see that for high and medium estimates we are already there. So we are not far from this company being a potentially at least interesting target, although it's very important to know that and notice that the company is still not profitable. Remember that the company is still losing money. We have actually projected profitability here of a 3%, 5% and 7% net income margin. So that would mean that out of the revenue, 3% would mean that the net income over here would have to be about 6 million in order to achieve this 3% over the $250 million. So you can understand that the company needs to do significantly better in order to achieve these projections over here. And for 5%, it would the same thing. It would have to be about 10 to 11, 12 billion, something of that sort, in order to achieve this kind of projections. And this would have to continue for the next few years with this kind of revenue growth as well. So it's not impossible to happen, but it's not looking probable. And so if you were to take this into consideration, you are taking extra risk, significant extra risk. And in this case, it may be beneficial to try an annual percent of 15% just to see what you are getting out of this one. And even for 15%, we are still green for medium and high estimates here. So this may be an interesting and a worthwhile purchase if you are again convinced that the company will achieve profitability very soon. And again, remember, with 13 it was a little bit higher, as you would expect. Now, would I buy this company? Probably not, but I wanted to make this video again because it is a trending one really in the markets, and I'm pretty sure people are looking to buy this one, and so I wanted to give you a sort of like breakdown of the financials and what you should be looking at in terms of paying. And also, this kind of payment will have to do with the net income that the company generates, and unfortunately this has been going down. What I'd like to see is the company's maybe next earnings, and maybe they're gonna be doing a little bit better there. I don't know if we have something in the news over here. Basically it's talking about why Aterian actually missed and things of that sort, why it's down to 11%. It's sort of like generic articles here, but nothing new. So yeah, I would like this company to start achieving profitability, and if that happens and prices are still suppressed, that would actually be an interesting price. So if the company becomes marginally positive, marginally net income positive, then we're having an interesting play over here in our hands. Very interesting one. Remember though that this is also a consumer cyclical play, so it could actually keep going down if we have maybe a recession or something of that sort. So thank you for watching the video. I hope you enjoyed this one. I hope it was interesting, and please leave a comment below and let me know what you think about this company, Aterian. And yeah, I'd love to hear your thoughts. Remember to like and subscribe if you like this video. And again, I hope you are gonna be having an awesome day. And if you did like this video, please remember to watch this one, which is about ExxonMobil, a very interesting cyclical company right now, which I think is an very interesting purchase potentially. So take a look at this video to discover what the financials are for this company and whether it's a worthwhile purchase. Thank you for watching this again. I'll see you soon. Bye bye.